Good morning, everyone. Happy Thursday to you. Another on-time start for me. My target is 9 a.m. London time. It's now 10:30 London time by my calculation. Hope everybody continues to have a wonderful summer. Gonna stick with Bitcoin and money today. I'm always thinking about our Ukrainian friends. I'm gonna go here. This is probably gonna be the best one to show as we continue to leak higher in price, as I was talking about. So I just pulled this into the model at, oops, why can I not see this, of course. I pulled this into the model at 110,000 right now. The curve is 105,000. All right. Again, if you have never followed my work, I've been writing charts like this, curves like this since 2018. Bitcoin has most decisively been following a power curve since 2016. And as we trend above this line with price, first of all, we solidify where the curve is, and then we start to even pull the curve back higher. All right, so we've pulled it down a lot. The black line, the trend line, has been pulled down from Bitcoin over the last 3 years. But with the ETFs, with the start of the latest bull, we're back at the trend line. Quick and dirty, the end of the year this year, no, sorry, not this year, the end of the decade, or start of the next decade, however you want to look at it, was closer to 600,000. But because of the price drops in this last bear, it's now 558,000. But every day that the Bitcoin price trends above this black line, it pulls the black line back up. All right, so that's how it works. Very simple. Log scale here. And if you look at it this way, we're still a long way from bubble territory. Bubble territory being, in my chart, the 90th percentile. Based on the multiple, above or under trend, the multiple stays the same. It's a bit different than the percentile quantiles that Plan C and Cena have been doing, but this is just how I like to do it. I keep around a multiple. So 2x the trend, which is going to be 210,000, 211,000. That's the 90th percentile. We got a while until 210,000. Of course, it could happen with a few God candles any week, but we do have a while. All right, 90th percentile here. Started in January 2021, and days above the 90th, cumulative days, this is where you get this mountain on the right-hand axis. All right, 99 days here in 2021, 3 months. 2017 had 84 days plus, give or take, 30 days. Again, 3-4 months. Also, you can have you in this little entryway here. Same thing in 2013. 4 months. Not a long time when you get up to bubble territory. Not many days. Again, never financial advice. Do what you need to do with Bitcoin, but this is how I'm looking at it. Good evening, Tim. Good evening. Tim, you're in Australia, right? New Zealand? Remind me. Sorry. I have such a fish brain with some of these things. I started late. Good morning, Daniel. Let's keep it interactive, so no lecturing. Australia, right? That's what I thought. How's the weather there? We're finally getting some warm, sunny days up here. I want to review again what I showed yesterday. Just really quick. Ask me questions if you have it. Remember, this is the base money supply, all the currencies, top 50 currencies. 26.2 trillion as of my last quarterly update. All right. The top 5, including sterling, gets you to 80% of the pie. Now I have this chart for broad money. All right. A lot of people quote broad money. Again, it's not comparable to Bitcoin. This is all sort of different bank accounts. Some accounts less risky, some accounts more risky. Labrit, Casper. Yes, BTC ripping. BTC is leaking higher with the money supply. So I just wanted to, again, make the distinction. Good morning, Anders. Good to see you guys. I didn't show this chart yesterday, but broadest M3 money supply. So US M3, all right? You got to calculate this on your own. Fed doesn't do any more, 36 trillion. Doesn't include euro dollars, so there's a lot of liquidity still in the dollar market outside of this. Euro M3, much smaller, 18 trillion. Japanese M3, 10 trillion. And Chinese M2, they don't even publish an M3. Remember, M3 is institutional type deposits. 45 trillion. So a lot of Chinese money in the world. So the difference between this chart and this chart is here I got 50 currencies. Here I only got 4. I'm working on it. We'll build it out. We'll build it out together. World total, 110 trillion. I think a chart, I couldn't even figure it out. I think I was just adding something wrong yesterday. I reviewed some of my numbers and did some things, but I think I was showing 99 trillion yesterday. It's 110 trillion if you add up these 4. All right. 36 for the dollar, 18 for the euro, 10 for the yen, and 44 for the yuan. It's a pump hype stream for sure. No fear, just fun. We're all glad that we're in Bitcoin. Yeah, 110K Bitcoin and $110 trillion in broad money supply. We're all giving each other confidence here, right? This is no joke. Yep. So just again, the estimate, presuming 80% on 26 trillion is these 4 currencies, roughly. If you divide 110 now by 80%, it's what, 130? 137. So 140 trillion probably, although it's probably even less because most people want to hold deposits and trade in liquid deposits in these currencies. Really just the 3, not that 4th one, the yuan. But anyway, so there's obviously a difference here between broad money, which is 140 trillion, assuming now, versus base money, which is 26 trillion. Bitcoin's still comparable to this, just a reminder. And then this is wild. So this is all these 3, same money supply added up, just looking at this 3. But then if you take broad money divided by base money, very simple calculation, this is what they call the money multiplier or the monetary transmission mechanism. They do not, unfortunately, sir. Maybe eventually. I mean, I can try to set up some back end for users. I mean, I don't have accounts anywhere. It's all free here. Literally, as I just said, I think I showed this chart yesterday, and I somehow in the sum total, I had these numbers, but in the sum total, I was showing 100 trillion. So I think I wasn't including Japan in the total. So I make little mistakes sometimes, have to correct them. I'm doing it all on the fly anyway. It's not, I don't have an infrastructure like to get it like for everybody at the moment. Maybe if you guys really want it in the future, but I think it's just easier on these videos, frankly. I've thought about this for years. I never have done a product, but we'll see. But this is pretty interesting. So roughly, and in particular, the dollar M3 money supply got way ahead of the dollar base money supply on the eve of the crisis. So there was $18 of broad money to $1 of base money. Let's take off China. But if you can see all three of these currencies, dollar, yen, and the euro, this is just like financial repression, money printing. So theoretically, a higher multiple is a riskier multiple. It's more leverage in the system. Now there's like not much leverage at all. Financial repression, money printing by the central bank, less risk taking by the broader monetary system. I'm not saying that the broader monetary system is safe. It's just theoretically that's what it used to mean, this money multiplier. Everybody gets bailed out. Zombie banks. I mean, Japan is the most funny one here. Just look at Japan. It's like systematically whatever it takes. Here was Draghi. Whatever it takes was right here for Draghi. Actually loosened it and went back. But anyway, if you look at this just without even having to talk economics, because I don't believe a lot of this stuff anyway, that, you know, they can control the system. But there's so much liquidity, central bank liquidity in the system now relative to broad banking liquidity. And then look at China. It's done the complete opposite. China was way lower, communist China here in the 90s. You know, you'd only have 2 or 3 units of yuan in the banking system versus what PBOC printed, People's Bank of China. And now the Chinese are more, the communist Chinese are more, they're more risk takers, bigger risk takers than the 3 largest capitalist currencies. So I tweeted that yesterday. I thought it was pretty funny. Pretty interesting. All right. This is what I wanted to talk about mostly. Just let me know if you have questions here. But so let's take this off. Let's go back to this. Remember this. Probably not, Tim. I mean, I'm not. This is. This part doesn't have anything to do with Bitcoin. It's just it's not included. But you are right. With the chart I'm about to show you, I do include this one, right, which is base money. And there is $5.2 trillion worth of yuan printed by the central bank of China. You know, China's changed the law so many times. Who's to say they won't change it back at some point? But I guess technically you're right with a simple question like that. I mean, it's illegal to buy Bitcoin, but so as far as the fiat world goes, this is the This is like the main body of work that I've been researching for a long time. So $26 trillion, that's the Bitcoin comparable fiat money supply. And then, as we've talked about a lot, if you add gold, if you add silver, you get to 40. Why can't I find it? At the moment, $43 trillion. All right, that's adding gold and silver. So 43 trillion. Bitcoin, a couple percent of it. Good morning, Gio. I see your message, and I saw it. Let me, I'll come back to it. Just this one more on Bitcoin, and then we can talk whatever. But so this is what I've showed. I got this on log scale now, so you can see dominance basically tracks more the Bitcoin curve. We get to 100%. So it's on log left and log right. We get to 100% in 2043, 155 trillion, right? Obviously, something's going to happen even before then. But to me, it's obvious. It's not going to take that long, but this is what the math says. So what I was talking about a lot yesterday was, let's just measure the slope of these curves. All right, so let's start with this one. What is the slope of this curve smoothed out? How's it going to look if we could draw it? And the answer is a straight line. This curve is 7.3%. So if you just smooth out the growth of gold, the growth of silver, the growth of all money, this is sort of the blended rate. Is it exactly the global cost of capital? I have no idea, but it is the global growth rate of monetary assets. All right, so this is a smoothed out rate of this. It's clearly exponential, clearly straight line on log scale, both for the actual trend and for the trailing 12-month growth. All right, so let's take this off. Let's look at Bitcoin. How does the growth rate of this curve look? It's down log scale, smoothed it out, power. It's here. So we'll take off Bitcoin now. Now we can see. So the early days, you know, getting thousands of percent return. That's actually the growth of the network. Kind of like, it's the growth of market cap, basically. And if we go to today, you see it's a little bit different. It's about 46%. That discrepancy, remember I usually said it's going to be 42% by the end of the year. Here it is 44%. So the 42% is the trailing 12-month growth on the curve for price only. That's like this curve. This curve will grow by 42% by the end of the year, trailing 12 months. But here, I do the price times the coins and then measure the growth of that, because we're measuring the value of the network. So it's really the market cap. But it's close enough. You get the idea. But my question that I was asking yesterday is, what happens when everybody wants Bitcoin? Everybody sees that you're losing at least 7% per year in the value of your money based on the accretion of the money supply into global assets. So Bitcoin will get you right now about 40%, 44%, whatever it is. Sorry, it's here. 44%. And if we go all the way out to 2050, we still haven't matched the TradFi. We're still growing faster. Bitcoin network, 15%. As I said, you got to go out to 2070 to reach 10% trailing 12-month growth. 2070. So the question I would have is, how does the financial world, like when you make contracts and you make loans, or you want to borrow money, or you want to analyze the cost of capital, and you start to have a lot of companies that might look like MicroStrategy, or everybody's corporate treasury has some Bitcoin exposure. you're going to at least demand this sort of a return. But it's confusing because the return actually declines year over year, although it is always higher than the TradFi returns. So TradFi returns are simple loans, right? You can have a car loan, 3% all in, 4%, whatever it is. House loan, mortgage. It's a fixed rate of interest. But if people start to figure this out, that this is really how the model of Bitcoin works, what do contracts look like? Because as you hold more Bitcoin, other things on the outside look like they're getting cheaper. But how does that blend with all the financial instruments and loans and everything else? I'm not sure. You could imagine maybe like instead of an exponential compounding loan, you could have a power loan where the rate of interest in Bitcoin actually declines every year, right? So the borrower doesn't have to pay as much back interest, but you still have to pay some back, where you got to pay the creditor more Bitcoin than you borrowed. But the burden gets easier every year. It's a pretty odd concept. That's the point. Yeah, it's also a good thing. Good point. I said this at BTC Prague, and the people that I know, the companies that I've worked with or invested in, some on-ramping services, retail is way subdued this cycle compared to last. Much more ETF flows, institutional flows. Yep, that's right, Casper. That's all they're going to do is just print more. Even if they let off the gas like they did here for 4 years now. Almost 4 full years. December 2021 was the top. And everybody knows Trump wants the US to print more, expand this balance sheet right here. It's all good for Bitcoin. I haven't watched that. I'm curious what either of them say, because obviously, well, presumably both have thought about this. I've thought about it as well, but I don't think a lot of people, and maybe even Saylor, have really modeled out the power principles of Bitcoin. Like, people can talk all they want, but this is how it looks. Like, you can imagine, like, let's say we're in 2041. We're very clear, Bitcoin is about the size of all currencies, but we still have other currencies because governments want to print their money. So let's say in 2041, we expect Bitcoin to grow. Well, let's say in 2040, we expect by 2041 the Bitcoin, the value of the Bitcoin network in dollar terms to increase 20% year on year into 2041. So from 2040 to 2041, that's what it's showing here. But then the next year, if you go to April 2042, it's only 19.3%. So how do you structure a contract that way? It's actually, you may need to structure it, the interest schedule, where you actually pay not a fixed rate of interest, but a declining rate of interest in Bitcoin. Or you don't pay any interest at all and you just have equity investments. I've heard people talk about that, right? There's not going to be no more debt. There's only going to be equity-like investments because it's either hold Bitcoin or take a risk and invest. But if you invest, you know, you got to really show me that you can outproduce the performance of Bitcoin, which, mind, is still going to be better than TradFi come 2070. And even longer than 2070, because that's only 10, it will get to 10% in 2070. So it's an interesting question. Right. Yeah, so here's the business perspective, someone that goes out and understands cash flow. Here's someone who's not in business and just likes philosophical hard money. I don't think either of them have modeled it out as I have, to be honest. I don't think they've thought about it. And that question is going to have to be asked. One asset was, just think of the green line again as the growth of all TradFi central bank money and gold and silver. So just TradFi. I switched the name to TradFi now. So you have your TradFi. It continues on at 7.3% per year. Bitcoin's perceived as more risky at the beginning. But then as time goes on, it's still giving you a better return, but it's less and less risky. Good question, John. Well, I can't, like I said, I can't give you full advice there. It's always great to hold Bitcoin, but if you want to just talk very basically, we're at fair value territory. If you believe this chart, and it's a 96% R squared, looks pretty good. Bitcoin gets overheated, goes into this rainbow territory, the bubble, that's a bubble. We're not there yet. We're not there yet. Not even close. We're right on trend. So the price basically needs to double from here to be in the 90th percentile, which would be considered overvalued territory, according to my model. So I would say take that for what it's worth. Right now, we're at fair value for Bitcoin, but that could quickly change. If Bitcoin goes up to 150,000 and continues to go up every day, you might want to rethink that. Did he actually say that? That's funny. Right. But this is what I'm saying. Casper, is if your prices are gradually falling from you as a perspective of holding Bitcoiner, then yeah, you get into a deflationary environment or the opposite of interest. But even before we get there, this is my question. How do the change of contracts work? Presuming it's not like a global system collapse and all the governments go into Bitcoin, which I don't foresee happening based on these charts and these charts. What I see much more likely happening here is they're just going to use the money that they have monopoly on, buy Bitcoin, and actually buy more gold, which they're doing. They're buying more gold. I need to show that you guys the breakdown of central bank holdings of Bitcoin versus gold. But anyway, back to the point of interest. You can have an interest contract here. And you could also blend it, right? So like, let's just look at this, for example. Look at the Bitcoin number. Let's even take this off. Look at the Bitcoin number. We assume 30% growth in 2031, but to 2040, we assume 20. Okay, I'm being very very basic here. From 2030, it's 30%. 2040, it's 20%. So split the difference, 25%. You could well do a loan contract like that of just 25%. That sounds insane, by the way. I mean, I would still, as an entrepreneur, I would never pay 25%. Maybe you could structure some convertible note, but you could do it where the blended 10-year rate is 25%, and you could have more interest paid up front. Obviously, with startups, they don't pay any interest at all, but they have convertible. But more shareholder interest, however you structure it, paid up front, less at the back end. It is possible to structure notes like this. But yeah, you are right. When it comes to the end of the day, if it's a whole BTC denominated world and we're in gradual deflation, then I think Jeff Booth argues that. Like, why would you even need debt at all? I don't necessarily buy that in its entirety because I think there's still always a price. There's still going to be a price to get rid of your Bitcoin. Like to whether it's factoring or a very short-term loan, working capital. If Bitcoin is the standard and someone wants my sats to do something, then I'm going to demand some interest. How you structure that though in a full Bitcoin world is it's a very theoretical question right now. Excellent work. Yeah, it's a nice bonus. The Germans, man. Germans have it great. As far as I understand, if you hold Bitcoin for longer than a year, you owe no cap gains. I believe that's still the case, unless anyone wants to correct me. Hi, Tim. Yes. I mean, if this is your hurdle rate and your hurdle rate will decrease, it's still going to take a long time for it to decrease compared to other investments. And I think this is precisely why Saylor has been able to do some crazy things. Like, this is what Bitcoin was growing when he started buying. This is the trend this is the slope of the trend. 73% per year back in 2020. So he could offer all sorts of crazy instruments at 1%, 2%. I mean, obviously he was arbitraging. There's a huge disconnect in what the market was paying and demanding for Bitcoin versus what people understood it. That gap will close, and we see that from this curve, and the slope of this curve gets more gradual. Well, that's a good question, actually. Gresham's law, the traditional maxim is bad money drives out good. But usually people don't explain it appropriately. It's bad money drives out good in the presence of foreign exchange controls, in the presence of government intervention. And I'm sure we could have government intervention for Bitcoin. So in the case of gold and silver, for example, the United States had a very poor bimetallic system where gold and silver were fixed to each other and silver was fixed to the dollar. So basically, depending on the market mechanisms, people are going to hoard the undervalued money and spend the overvalued money. Yes, we do. We're in a chat group, actually, but I need to have a discussion with them for sure. Giovanni and Peter Schiff would be a hilarious debate. That's a great question, John. Frankly, I think the Democrats are still so dumb to these ideas. I mean, something is going to tell me they're going to change their tune on this. But like Elizabeth Warren, I mean, as Scaramucci was saying, I mean, she was so doltish about Bitcoin, but she was also in bed with FTX's parents and, I don't know, trying to work on legislation for basically FTX to do whatever they wanted. And then when that failed, she was trying to like distance herself from it. But obviously she's terrible. I think they're getting the message, but it is a good question. You have no, every time I see Democratic media, they don't understand anything about the Silk Road case. They don't understand anything about Bitcoin. They only think crypto is a scam. And there are basically most of crypto is scams. So it's hard. Yes, sir, Forrester. That is the traditional definition. It's not just bad money drives out good. You have to have the presence of state intervention or capital control for that to happen. You have to have the state overvaluing one money and undervaluing another money. If the state doesn't do that, then the market wouldn't matter. So there's a more full. It's not just bad money drives out good for the sake of that. You have to add that asterisk of in the context of state intervention. This would be funny. Yeah, no, I think you're right. I think you're right, Casper. We have a lot, but back to sort of this idea, we have a lot more. I think it was Vijay Boyapati said, the risk of government now to Bitcoin is eliminated. I don't think so at all. But with the election of Trump, he said that. And I would not count that at all. I mean, we see what's happening in China. We see certain countries are going to be friendly to it, certain countries unfriendly. Governments will change, laws will change. There's a lot of work to do. I could have sworn Germany had that. I guess they changed it. It would be an entertaining mess. I mean, Giovanni with anybody is always entertaining, in my opinion. No. maybe they've thought about changing it, or maybe they will. I don't know. By the way, uh, I mean tax is an element of a control, so that will affect Gresham's law as well. Not in the traditional sense, but yeah, I mean, if you're taxing the good money, people will hoard it or take it underground, try to do something. When you tax something, you always get less of it. You know, Safedine was very confident in the stock to flow, and that turned out to not be a credible model. This is far and away the most credible model in Bitcoin. Not saying it's going to be correct always, but it makes sense. It's how networks grow. It's how cities grow. I told you guys about Scale, right? Read Scale by Jeffrey West. The book is just called Scale. And when you put a power curve next to an exponential curve, this is how it looks. So how do you work with this when you're talking about, you know, the whole TradFi world, like all your brokerage funds, all managers, all your stock brokers, your family offices, they all think in terms of hurdle rates of getting over something like this. It could be 7, could be 10, could be 8, 9, could be 3%. They're all thinking exponentially, which looks like a linear thing. It's just a straight number year on, year in, year out. But that is objectively not is what that's not what's happening to the Bitcoin network. So it's confusing. I'm not saying I have an answer. I know how it's going to look. And again, a lot of these people kind of with the hopium of Bitcoin becoming like the world's digital gold again. I think it will happen. I think central banks will start to hold it, or treasuries will start to hold it, sovereign wealth funds. But that does not stop this, which continues to be exponential growth. If I put this on log scale, you can clearly see it's a straight line, right? It looks just like this, roughly. Lower left to upper right, straight line. Let me show you S&P. So stocks remain the biggest competitor to Bitcoin, I think. So here's the stock market. I did this in my BTC Prague presentation. So this is just zoomed in, but it's the last 25 years. This is the modern trend. This is from 1969, that same period I usually start with, like roughly end of the gold standard. And the trend is here. This is the 1969 trend. The slope of this curve is like, it's 7 or 8%. I already forgot. It changes depending on my starting point, but it's 7 or 8%, and that's without reinvesting dividends. Okay. But since 2008, if you caught this trend and you started right here at the nadir, if you start here, December 2008, take all the data, this is the 2008 trend. So it's way better. Stocks still have people's eye. And of course, this is just the main, what percentage of the S&P is the FANG stocks, or whatever the acronym is now? It's a huge percentage. You got the AI bubble. The slope of this curve is 12% per year. 12%. And that's the best one you can find. As far as like broad markets, gold isn't even growing that fast. Silver. The only thing that's growing faster than that is Bitcoin. Thank you, Anders. Thank you. I have to say I agree. I've done so many charts like this with these straight lines, right? The exponential growth is just a straight line, and you just clearly see that that's not what Bitcoin is doing. It's doing something different. Hi, Casper. I have not, but I can imagine. So you can buy fractional shares, I imagine. Like fractional shares of stocks. Can you actually buy tokens of Apple? That would be interesting. And if they are buying tokens, is it on a certain blockchain? I mean, I wouldn't discount some of that because are they using like Solana or ETH? I can just look it up. Why don't you give me the AI? Someone let me know if you see the actual blockchain. It would have a completely different risk profile than Bitcoin. It would be different. Also, yeah, I think I mean, everything to some extent is a measurement of the printer, but it's the most competitive, has the most interest, most liquidity in the stock market. Oh, ARB, thanks. I guess I should play around with these things more, but I don't. I just stick with Bitcoin and charts. Isn't ARB like a second layer of ETH with a separate token? It all seems Rube Goldberg to me, like a bit too complicated. Because if you have a token price of ARB, then you have the token price of ETH, then you have the stock price. But I don't discount the idea of tokens. I mean, everybody, something will be tokenized, even if it's like title to land or something. Something you can actually see it, see if it moves. You can see who signed it. I do think that there are benefits there. Of course, that's an old debate in Bitcoin. People just say all that will be on Bitcoin anyway, or on a side chain or a layer 2 or 3 or 4. It's above my pay grade. At the end of the day, I'm not sure if it will be on Bitcoin or another chain for that type of activity. The purists, which I think Saylor is not a purist, some other people are, but they're ready for Bitcoin to take over each currency here. It's not going to happen. Not anytime soon. It's $110 trillion, just these 4 currencies. And I still think the best argument for that is the excitement that the purists, the Bitcoin maxis and hyper Bitcoinizers feel for if the state will hold Bitcoin. Because if you say fiat bad, but Bitcoin good, but you want bad fiat to hold Bitcoin, that's going to by nature make fiat less bad. And so they might give it a try. But if that makes fiat less bad, then fiat's going to keep trucking along at its, 7, 8, 9, 10% loss of purchasing power a year. Thank you, Tim. It's less than I thought, frankly. If you add NVIDIA now, I wonder. This is another thing I have. I got to get. I need some help with my APIs. I have an API for some stock stuff, so I want to start showing stock market capitalizations, but I haven't even set it up yet correctly. But I want to start showing stocks. I hope everything's all right, sir. Good morning or good evening. He does. He does. You can see a lot of that in TradingView too. I logged in. I've shown you guys TradingView, my account there. There it is. I would like to get more data here. Like, actually, I'm just pedantic. I need to play with it myself to understand it. But this is like long-term Case-Shiller PE ratio. Obviously, higher is overvalued. Price is higher, much higher than earnings. This is why is that in May? It wouldn't be overvalued in May. Be overvalued in 2007. May of 09. I don't actually understand that, to be honest. It should be way undervalued. And the stock market bottomed out at 666 in March 2009. Maybe earnings were so low that it went to there. That's very strange. Anyway, where we are now, 29.68, lower than this December 2020 top of 39.26. But you know, you gotta just like draw trend lines and things to see how it is. This is so communist, Gio, so socialist. What do you think? No, I don't disagree. As far as not throwing, nobody would come for me about throwing people in jail, but the control is just insane from a few power hungry maniacs. The control that they have is unbelievable. I used to have a chart. I need to update it about how the U.S. Congress, like how many people there were per representative in the U.S. Congress. And if you went back, 250 years ago, is unbelievably out of whack compared to today, as you can imagine. You can, and I can even do it here. Let me find it. Let me pull this up. I'm so JV at TradingView. Let me see. I can do it on my phone. Anyway, a lot of dead time here. That's right. Yeah. Yeah, you're right. You're right, actually. You're right. You're right. That's probably what it is. It's probably NTN. No, it's probably TTM, I guess, right? It's probably TTM. It's TTM. Of course. That's what you were seeing with the March PE that high. Come on. I'm so amateur here. Show me how to make a formula. Okay, here we go. S&P 500 divided by gold. Enter. Okay, now show me everything weekly. So this is why I'd rather do this stuff myself than play around with TradingView. But here it is. This is S&P gold. So this is how many ounces of gold it would take to buy the S&P. Right now it's 1.84. Just simple numbers, but you get the idea. But it's not long enough to tell you anything even. This only goes back, if I do month. You guys are better at trading view than me, I'm sure. But I don't even know why that's such a short time frame. Only goes back to 2018. I'll do a chart like that. I'll do a chart. It's a good chart. Whether you get 12%, which is the black line, or you get 8%, which is the green line, nobody's stopping this train. What's our corn at right now? Haven't even checked. 109. Dipped a little bit. But I'm curious. You guys let me know. I mean, I'm open to ideas here. Someone tell me what a loan contract looks like 10 years from now. Especially if we're denominated in Bitcoin. Maybe there won't be loan contracts in Bitcoin. They'll still be in currency, but Bitcoin becomes the collateral. There will only be collateralized loans. It's a possibility too. My friends at Debify do that, collateralized Bitcoin loans. Basically, the loans are from lenders in dollars or in stable coins, but there's always Bitcoin sitting there, usually over collateralized. So over 100% of loan value is in Bitcoin. So then it's like a great loan. It's a great deal for a creditor, for a lender. But the rates are too high for borrowers, in my opinion. Sorry, Max. It's very high to borrow at that. You know, they're still in the teens. You know, it's like credit card rates. You need to get down to car loan, home loan rates. You need to be down in the, you know, mid fives. Anybody got anything else? I will do this for Monday, or maybe tomorrow if I can. I have enough time. So yeah, my estimate yesterday was a little bit under. Again, this is why I don't have stuff on my website. 110,000 is broad money. Top four currencies. That means at least 137 world currency value. Yeah, so that's a good question, Casper. That's a good question. It's my answer to you is just that I'm trying to stay apples to apples. I'm trying to stay in money and not in anything else. But as you've just mentioned on this stream, you know, you could have stocks that could turn into almost like money-like instruments if they're tokenized. Bonds. You can have all sorts of things, blockchain, and people are going to do it. But I think it just is a clean. We have the history. Just continue, at least for my model here. Like I'm I'm pretty set on all the money in the world, nothing else. But you are right that Bitcoin liquidity does not come only from this. Uh, you could use any denominator, right? So I always say Bitcoin's comparable to this, right? The base money supply, but obviously there's this money supply, which includes basically a lot of stock investments, because not exactly stock investments, but cash sitting on the sidelines, not invested in stocks is here because it's in money market funds or repos. So that's all in this money supply. So liquidity is, you could compare Bitcoin to this money supply, but it's still not an apples to apples thing. That's just my basic answer. I don't want to overcomplicate it. Plus, if I really want to do worldwide stocks, then I have to get, the Indonesian stock market. That's a lot more difficult than just getting the Indonesian currency, which is included in here, by the way. How high do we think that's going to get? That's a good denominator. I need to do Monaco real estate. I do not know, to be honest. Is a shitcoin? Oh, it's a MicroStrategy. Sorry. It's a Series A thing. I don't have thoughts, no. I haven't researched it. But he's no one can say that he's not trying to arb the hell out of the market, and he may succeed. I mean, why bet against Bitcoin? Yeah, no, that's true, Casper. I mean, but there still are a lot of gold bugs. Again, like I said, even though there's 20 trillion in gold value, 4 trillion of that is backing this money. It's in central banks still, 4 trillion. So, and Bitcoin will as well back this money. 100% Bitcoin is going to back this money. Like strategic Bitcoin reserve, Bitcoin in treasuries. There's already 50 billion in Bitcoin. That's nothing like gold's 4 trillion, but it's getting there. So I just want to keep tracking all that, because in my opinion, that's like historical money, present money. It's just on money. It's not on anything else. Yeah. Okay. Thanks. Yeah, paying out dividends on your Bitcoin yield is an interesting concept as well. Yes, there are, Daniel. We can go to our friend Rodolfo's website, which I'm going to pull it up. I'm going to pull it up in a second here. It's a great website, much better than mine as far as interactive. BitcoinTreasuries.net, BitcoinTreasuries.net. You go down here, and here we have the current coin distribution. MicroStrategy just dominating. Unbelievable. 600,000 Bitcoin. A little bit less than BlackRock. How about that liquidation of Grayscale? I mean, Grayscale used to be here. It's crazy. Still a huge holder, though. Private companies. All right. And remember, Tether, even like Tether's still the best business model in the world. We talked about this on one stream, but even though Tether has $10 billion worth of Bitcoin at the moment, their balance sheet is 150 billion, and it's like pure profit. All they do is issue tokens, which they were doing completely unregulated. Tether is a money market fund plus a euro dollar. It's offshore dollars. And what a business. I mean, they have like no overhead, 70 employees. You just issue shitcoin tokens, dollar tokens. People buy them because they want some stability. Invest those tokens into dollar interest-bearing assets, i.e. treasuries. Get on the golf course at 3 o'clock, as they say, and continue on. And they still have $10 billion worth of Bitcoin. Governments here, the total is about 500 billion. Actually, let me check. 527,000, that's 52 billion. So here are the Bitcoin holding governments. Love this for Ukraine, by the way. Oh, wow. He actually tracks that. That's North Korea. Estimate. Apparently, they just started tracking North Korea. This is all of the data. Yeah. Peter Schiff would tell you it's the future. It's the future, Kaspar. Oh, they don't need it. They don't need it, trust me. This is surprising to me, too. Are these unpaid creditors? About a year ago, right? Everything was clearing out. And that's still a huge, that's still a third. Basically, 30% of, like, this was, as long as I've been in Bitcoin, this was a micro strategy. Sorry. I was thinking about too many different things. As long as I've been in Bitcoin, this has been the overhang on the Bitcoin network is all these coins that Empty Gox was holding. They're still holding 45,000 coins. The original was 850,000, but then that was revised down to 600,000. Anyway, it's a great site. They're doing a good job at just tracking every little bit of Bitcoin. So if you think about this, I can give you this ratio. Okay, so governments, this has gone up. It used to be about 15%. Now it's probably 20. Governments hold 20% of all the world's gold. Interesting, right? That's used to be like 15%. I think they bought more with the value. Let's say 17, 18% of all the world's gold. If you do 50 Bitcoins, sorry, 50 billion in value, which is government holdings, divided by roughly 2 trillion, that's 2.5% or less. So what I just said is, as far as gold, governments hold 20% of the gold market, the entire stock. Governments hold 2% of the entire Bitcoin market. And again, now I sound like a maxi hyper Bitcoiner shill wanting governments to buy Bitcoin. It's probably not a good thing if governments hold too much Bitcoin. It's great for price in the short term. But again, governments buying Bitcoin is just going to extend your fiat life cycle. So cheer for what you want. But there's plenty of room. If you just do that simple analysis, I'll make a chart of this. 20% of government's gold, 2%. So they own, relatively speaking, 10 times less Bitcoin backing their money than they have gold. That number will increase. And yes, they will expand. Still, they own one hotel, right? That's incredible what they've done. I love it. I mean, this is what I was going to show you. Get that stack growing. People are getting very creative. My friend Fred Krueger, Wall Street expert, thinks that these yields are going to collapse to 1. I absolutely agree with him over the midterm, but right now, this is like the new ICO bubble. Hold 1 Bitcoin, your market cap will bump up 3 units for every 1 unit of Bitcoin you hold. Basically here, right? Nah, it's wrong axis. Never mind. It's not the right axis, but they do have here. Oh, Rodolfo's getting complicated. You have to log in now to see these metrics, but have your market cap multiple is here. How much your market cap is boosted over your BTC holdings. So they have all that data. Got to log in though. I'm sure they will. I'm sure it's harder to do technically on Bitcoin. But this is that Cantillon effect working its way through the system, right? Just like gold miners used to have access to the money before anybody else. Governments have always had that in the last, whatever, couple hundred years. But now anybody that can get to Bitcoin first, creatively use it, you have a magic multiple, a magic yield. ETH, of course, is chasing this with other things, but I don't know. There's only so many different things you can pay attention to. Adam is a great, great dude. I can't find it exactly, but oh, you just mean in their side chain, yeah. They have been working on tokenizing in there for a while. On Liquid, basically. Just blanking on the name. Liquid has 3.27 billion total value locked as of May. It's pretty big. But I guess considering size of Bitcoin, maybe people would expect a lot more. I don't know the answer to this question, Tim, actually. I know people donate a lot originally in Bitcoin to Ukraine, and also they had, I think, some things they confiscated. Yeah, the journey began in 2018 when 57 Ukrainian officials declared ownership of over 21,000 BTC. Sort of remember this, but they might have bought it at cheap prices with funds, public funds. Can't exactly remember the whole story. But I do love to see that relative to everybody else in this picture. Germany really still has zero. But yeah, if Ukraine's got 46,000, that's incredible. Number 4. Thank you, sir. Yeah, it was a long time ago. World was a different place, wasn't it? I'm going to be honest, I don't really know what this means. Sounds kind of weird. Yeah. And many governments have gotten that or have just picked it up from taxes or confiscations if there were like, obviously that's a questionable thing for people that believe in free market private property stuff, but guys, I got a late start and other things to do today, so I might wrap it here, but I will be back tomorrow. I need to write down all the new charts that you guys give me ideas for. A good stat to close it on, though, is governments still hold 20% of the gold stockpile. They hold 2% of the Bitcoin stockpile. So that is going to increase. Think about how this looks for contracts. My guess is as good as yours. Thank you, Broadsword. Appreciate it. With that, I will sign off, guys. So have a great Thursday, great summer. See you guys tomorrow. Thanks, Anders. Thanks.